Hey everyone, welcome to the KE Report, a Friday daily editorial with Joel Elconin, co-host of the Pre-Market Prep Show. Also check out the Stock Trader Network, a couple shows that Joel is hosting for all of you active traders out there. And Joel, let's talk markets as we usually do. This week, another fairly strong week for markets. US markets moving higher. Also interesting to see international markets, especially Europe, back to their recent highs. Seems like the delay in tariffs, some better economic news out of the US, and some decent earnings. Really, everything playing into this market rebound. Again, US markets, they're not back to all time highs. So there's still a contingent saying that this is still just a dead cat bounce in a much longer downturn. But the fact of the matter is, we are getting some opportunities on the long side for, at least right now, short-term investors. What do you make from this rebound here, Joel?
Hey, it's a Goldilocks market right now. It's the buy to dip mentality. I think that the whole narrative has changed a lot on the tariffs. What are they going to be? If they're going to be, you've had, the 90 days, which actually ends on July 4th. You just had quiet. And, Trump said he didn't care about the market. He didn't care about it. He was going to do what he thought was best long term for this country. But when the bond market started collapsing, he started to care about the market. So for those that were looking at the Trump put, well, there is a Trump put in the market, and the bond vigilantes brought him to it. As you mentioned, there's also been, we're getting through earnings season here, except for Apple. Our big tech is, showing us the way, how, depending on, the chips and whatnot, tariff related, but still your technology companies producing a lot of cash or coming out with good earnings. The market's rewarding that. An old stalwart that has been a big drag on the market. Microsoft came to live yesterday. So, when you combine the decent jobs data today, lower inflation data earlier in the week, and then, a little bit of a walk back or at least a pause on the rhetoric and the tough talk on tariffs, there you go. You got a rip roaring rally here and caught a lot of people off guard that didn't buy that dip back earlier in April.
Yeah, Joel, it's almost like if somebody fell asleep in the month of March, missed April, and woke up now, they would think, what's the big deal? Nothing's really changed. And we had people coming out of the woodwork calling for recessions, even depressions, just a couple weeks ago. But the economic data belies that because the inflation's not that bad. The jobs number came out; it's actually better than expected. So, is the recession that's the most advertised recession of all time? We've heard it for years now. Still on its way, or has that been called off now?
I tell you, did some traveling last week, through the Midwest and southern states, and people are still traveling. People are, still spending money. You just have to look, what is the pull forward? Are people doing things now while they have the money? Tariffs. I mean, maybe that's going to affect some international travel and whatnot. Your travel stocks are not looking that good, but right now people they have the money, they're spending it, and who knows what the chances are of a recession that we were looking at before. But I can say I was in one of those dire camps, saying things could get a lot worse before they got better. But then again, when you get to walk back on the tariffs, you get the more benign economic data, the market has a right to change its mind and reverse direction. And I guess that's so what you have to do as a trader or investor. But right now, earnings season, Q1 earnings season pretty much is going according to plan. Whether or not that's just a pull forward in the market, people spending now in anticipation of not being able to spend next quarter, we don't know. But we just have to take the information the market's given us and try and make the best possible trading decisions. I will say, you talk about the inflationary things and worry about the inflationary impact of tariffs. Things like the USO, crude coming down, that's a big component. That's where people, a big chunk of the inflation data has come from. And with that coming in and the drill baby drill mantra, it may be making up for some of the higher prices in some of the other commodities.
So, Joel, as you said, that earnings season, this one that we're currently in, this concept of stuff being pulled forward because of the tariffs, and tariffs have been on everyone's mind, and that has been behind a lot of that market weakness. Even though those markets are overvalued, fact of the matter is, a lot of people were saying, well, companies are going to move stuff forward and that's going to help out Q1, but all the forward guidance we're going to get, if we even get it, is going to be negative. And quite frankly, forward guidance has been quite limited because people don't know what's going on essentially with tariffs. That's all we hear in earnings calls. Instead of AI, it's all about tariffs. But it really brings up the question to me is this market weakness over the last couple months, especially, how much of this is self-inflicted simply around tariffs and simply now that we're getting a much lighter, softer tariff talk because we're in this pause and all we're hearing is that deals are getting done or discussions around deals are getting done? How much of this self-inflicted market weakness could actually be short-lived because maybe the US does walk back this hardcore tariff talk?
110%, Corey. I mean, there's no other way to look at it. I mean, what the market action would have been without that kind of rhetoric, we don't know. We do know where the market was at the end of last year. We know what the market did in the first 100 days. So, yeah, I mean, it was all self-inflicted. It was all the rhetoric. It was all the talk from the administration. But, what do we know now? What we know now, we don't know any more now than we did when he first came out. What's going to happen at the end of 90 days? What deals are actually going to be made? A big catalyst to the market today was like China. Hey, maybe we're willing to talk. I mean, the market is set up, for a scenario where, if they are pared back or repealed, it's good. If they're thrown out, it's great. It just depends on what the rhetoric, what the rhetoric's coming out of the White House. But if you ask me, it was all self-inflicted. And, the other piece of the puzzle, and I think this is being reflected in Apple today, is this long-term vision, for manufacturing in the United States. You've had a lot of large investors, hedge funds, they just kind of came out and said, hey, you know what? We missed the boat on that. We can bring some jobs back here to America and do some things, but it's all about cost efficiency. And so right now, I mean, you're looking at Apple making those out. Apple, makes all their iPhones over there. Yeah, they only have 4,000 employees, U.S. employees, but how many people do they have making those phones over there? So you're seeing being reflected in Apple, but how far they push this rhetoric of manufacturing, how hard would it be for a CEO of a major company, to like do an about face and bring all that manufacturing here? So I think it was 100% self-inflicted.
Yeah, it's almost like a lot of people were saying, though, that it could be that the tough tariff talk was just to get the deals flowing, and now there are deals flowing. Even China coming to the table, as you mentioned. Japan said today that they're willing to cut a deal, but that they're holding as a card all of their U.S. treasuries, which is a concern a lot of people have had, is what if international buyers were to dump U.S. treasuries? We have not seen a very strong dollar or strong bond market for the last month. So I guess we'll have to see how some of these deals go. And as far as the manufacturing moving home, I've actually had 3 pop-up ads just in the last 2 days about people manufacturing goods in the U.S. There's a whole push for that in people's campaigns. So maybe that's getting its job done too. Maybe there is more manufacturing coming back to the States, which would be nice to see. But a lot of people have made the point, Joel, that a big company like Apple can call Trump and say, hey, I need your help on these exclusions, even if stuff goes forward in 90 days. But the small and the mid-sized businesses cannot pick up the phone and call the White House, and they're stuck still in a lot of disarray. Would you expect small caps and mid caps to be more affected just because they're probably the most uncertain group of all of them?
Yeah, it's a great point. But look at it this way. Your IWM, your small cap, they have been underperformers for a long time, right? So this just nothing to enhance the scenario, what is going to bring them back. I mean, yeah, you could talk about the market, coming back here and resetting a look at all-time highs. IWM, trying to get back above 200, a nice rally off its low. Tell people that own biotech stocks, that there's a major recovery on the way. So you're just kind of going back to the tech. What's worked for a long time is working again. So what your smaller cap companies do need is lower interest rates. What you're seeing now is not necessarily the case. I mean, with the jobs data that you got today, the benign inflation data, I think they steady for longer, and I think I know maybe my short-term, predictions on the markets have not been as accurate. But I think one thing I've tried to preach is that stable for longer is, what most U.S. companies have based their economic forecasts for working capital. And right now, actually, tech is getting a boost today and also value. So until the White House tweets and upsets the apple cart, you have to respect the momentum in this market. We are actually not too far back from the high of getting all those losses back from Liberation Day. So we're getting above the 50-day moving average, still below the 200-day moving average. But, really, the bond market, investors called Trump's bluff, and the art of a deal looks like he made a deal.
One more quick comment on Apple and what they're saying. That whole concept of getting deals done, bringing manufacturing back to the US. Apple actually made a comment that instead of manufacturing the phones that come to the US and China, they are urgently moving their assembly lines to India. So it's actually not even coming back to the US. They're just shifting where they're making these phones. What do you make of the potential of other companies doing this, Joel, and what that means for maybe the shift of capital into some other lower tier, I guess, countries or manufacturing hubs compared to China?
Look at look at the ETFs, look at the action. I mean, one thing that we talked about was the historical underperformance of the foreign markets to U.S. markets. A lot of countries across Europe, many other countries are in a lowering interest rate cycle, providing stimulus to the economy. So yeah, maybe there perhaps a time China has been on the rebound as well. The FXI, well off its 2024 low. So, emerging markets getting back to the levels that they were at the end of 2024. So, yeah, I mean, there's the Japan ETF back up near all-time highs. So diversification, and even though for all these years these markets have underperformed the U.S. markets, maybe it's a time for them to shine while we, that doesn't necessarily mean we don't go higher, but flat's not bad, right? A lot of people sending a lot of profits. I think, the weakening dollar has also, helped the inflation situation when you look at it across the board. So a little bit of diversification in the foreign markets to pay catch up might not be a bad investment strategy.
Well, Joel, anything else from the earnings that you were hearing come in that's caught your attention in a positive way, where you were encouraged by, or that you saw the market reaction in a good way to the earnings versus the concern some have about the lack of guidance?
If you're in the gutter and you don't produce good numbers, you're going to get slammed. If you're trading up near all-time highs and you don't really blow it away, you're going to get killed. You're going to get hit. But, what was wrong with that Amazon report today for them to hit it 12 down to the close? The companies that, are going down because the bar was super high, then, Amazon's a prime example. After the reports from Meta and Microsoft, people really, wanted them to blow away. The bar was a little high. The first knee-jerk reaction was down, but now it's in the green today. So, if you're buying good companies at reasonable valuations that are posting good earnings, maybe not necessarily great earnings, and you're not trying to bottom fish in something like XYZ, it's really the same kind of investment philosophy that Warren Buffett and other long-term investors have followed for a long time and have had successful portfolios.
Just quickly circling back around to your comments on crude, we have a couple guests that dive into this crude chart on the weekend show, and I think it's one of the more important ones to look for right now in the commodities sector because that 63, $64 region was pretty strong support going back a few years in crude. It dropped below that level really at the start of April, right around that Liberation Day, fought back right to that $64 level, and then had another bad week today. This is multi-year lows for oil. Joel, when you just look at the chart, how concerned are you about the oil price continuing lower?
Well, I mean, I'm not concerned because I think that's good for the U.S. company, for the U.S. markets. And I don't own any oil stocks. So there's fundamental factors going on, such as the pursuit of these and stuff. If you want to own your Exxon Mobils and your Chevrons and stuff, well, you can expect to get the dividend. But I don't think you're going to get a lot of capital appreciation. So, I'm looking at the USO. I don't have my crude chart up here. And the USO is, it's back at, it's really, if you look at it from the USO, you're kind of at the bottom of a trading range that's really been holding since early 2023. So with the drilled versus drill mantra, haven't heard much out of OPEC here. So you never know when they're going to
Well, this week
do.
OPEC came out and said that they were ramping up production. They're actually pushing prices lower, it sounds like.
Well, there you go. I mean, you know why? Because they're still pulling it to the ground at, cheap. So, overall, I think it has a good effect on the U.S. economy. So, not being invested in that sector, maybe a little bit in some of my portfolios, the lower the better.
Well, Joel, with this renewed optimism that you're kind of seeing across the board in the markets, how important is something like the Fed cuts now? Because it seemed like before people became obsessed with the tunnel vision of tariffs, everything was about the Fed and what's the Fed going to do and how is the Fed going to react to economic data? Do you think that the better data pushes off the need for them to cut rates, and does that have an effect on the markets anymore?
I mean, stable for longer, Shad. Yeah, I mean, the TLT is not screaming rate cuts here. I think the Fed was on the path of, trying to raise interest rates. The pandemic hit. There was an extraordinary situation. They happened to open the floodgates. I think you're just looking at, historical standards where rates are, and I don't think they're going to be a lot higher, and I don't think they're going to be a lot lower. I think stable rates are the best thing for the economy, and really that's what we've had for quite some time.
So what do we have coming up here, Joel? We're still in this tariff pause. We actually have a Fed meeting coming up. It's crazy to think about. Hardly anyone's talking about it. What could move markets in the near term here away from this, it seems like general rebound that we're in?
Nothing. I mean, the momentum is moving to the upside. I think you'll just, the Fed. I don't think the market's that hooked on lower interest rates right now. I think, more than the Fed and interest rates, it's really the rhetoric that comes out of the White House. And that's what that's going to happen. It depends if no deals get done, or there's farther talk, or there's retaliation. I don't know. There's really right now, until that expiration on the 90 days. I mean, if the Bulls weren't in control yesterday, they're sure in control today.
Well, Joel, we're not going to let you get out of here without putting on your technical hat for us. So when you look at the S&P 500, considering the progress and clawing back a lot of resistance levels, what support and resistance levels do you have on your radar for the S&P?
Not the cash or the futures.
Futures.
For the futures, I mean, you're working your way in a very important bar right here. And the bar that I'm referring to is the bar prior to Liberation Day. That day we made a high at 57.73 and a quarter. That also happened to be had happened to be a Fed day. But you're getting all your losses back when you get back to that level of 57.73.75. If you want to focus on like the close that day, and I know it was a wild day that day, we ended up getting hit. The close on that day was 57.12 and a quarter. We're currently trading at 57.14. We've traded a little bit higher on the session. So ballpark it, the high on that day up to just over 5,800. That's going to be a major area of resistance. And then on a closing basis, on these declines, which, we always have them. I don't know what day it was, maybe on Tuesday or Wednesday, we had a sharp sell-off on the open, and we ended up in coming back green. So right now, the markets are saying tariffs don't matter.
Who knows where this leaves us, right? We're still in this pause period, but whether this is a dead cat bounce, whether something bigger has happened around the world, only time will tell. But boy, oh boy, it is giving us a lot to talk about week after week. So, Joel, thanks for coming on again this week. And everyone, you want to follow along with Joel, what he's trading and what he's watching day after day in these markets, covering earnings reports and covering market news. Check out the Pre-Market Prep website and the Stock Trader Network. I'll post both links in the show notes. Joel, thanks as always for your time. Have a great weekend, buddy.
Okay, talk to you guys.